looking at opportunities or ways to recoup possibly some losses that you might have experienced during the COVID.
Right.
Uh, this business is, or this webinar is done in partnership with the Madison Black Chamber of Commerce and the Scholz nonprofit law firm, as well as the Madison Development Corporation has graciously sponsored outreach to help
Right.
Black-owned businesses qualify for federal funds and for PPP. And so again, you know, I'm with the Madison Black Chamber. We are here to help businesses thrive and grow and sustain. So if there's anything that we can do, or training that you are needing, or resources that you are needing, we certainly want to make sure that you understand that we are a partner in this process with you. And just feel free to give us a call and ask any questions that you might have. Okay.
Thank you.
With that, I'd like to introduce our speakers, and we'll go ahead and get started since we have an hour. We have Melissa Scholz, and she is with Scholz Nonprofit Law. And then we also have Jeff Femerite as well, and he's going to be bringing forward some very valuable information on how to qualify for PPP funding, and really is here to help our businesses anywhere that they need to assistance in order to apply for federal funding. So with that, I will go ahead and turn the program over to Melissa or Jeff, whoever.
I'll jump in. Great.
Go in.
Thanks.
We will go from there.
All right. Thanks, Camille. We're thrilled to be able to do this with you. And again, thanks to the Madison Community Foundation for making it possible and underwriting our work. So that's great. I'll just say a few quick things and then turn it over to Jeff to kind of set the context. So we've had several rounds of federal legislation. I'm sure you've read about it. And throughout all of them, there's been this program, the Paycheck Protection Program. That's what Jeff is going to talk about. I think there's been some confusion over it, and that it was all of the discussion early on was focused on employees. And I think there are a lot of small businesses who didn't have employees besides themselves and didn't understand that it also applied to them. So in this case, Jeff, I think, is going to focus on what legally, they refer to as sole proprietors. And we just mean small businesses where one person owns it and does the work. It's possible that it could be one person owns it and they could still have some employees. So a number of different possibilities, but it does work just for one individual as well. The catch, though, is you have to have filed a tax return and have some document that you can share that proves that you were in business as of a certain date, in this case, February 15th, 2020, and that you had certain revenue, because that's what they base the amount you qualify on. And Jeff's going to go through all those details, but that's just the really big picture. I guess a couple other big picture comments is you don't actually apply for this through directly to the government. You actually go through a bank. And right now, because the program technically ended last month and then was extended again, there's a lot of banks that aren't doing it anymore. So here in Madison, we have contacts with some banks that still are, or credit unions. But like, for instance, Summit Credit Union did a lot of these during the first, second, third round, but they're not doing them anymore, except if you've already gotten one from them and you're seeking a renewal. So just something to keep in mind. We can touch on that again in a little bit. And I guess I'll stop there. That's it for now. Oh, one other important thing, and I'll put this in the chat, is we do have a lot of resources up on our website, which is scholznonprofitlaw.com. And we intend those to be used for free, to be shared. There's a sample application up there, Jeff's slides. So hopefully that's useful. But if that doesn't answer your questions, you can follow back up with us, and we'll give you contact information. And we can answer your questions directly. So with that, I'll turn it over to you, Jeff.
Great. Thank you, Melissa. And like Melissa, I'd like to thank our friends at the Black Chamber of Commerce and at the Madison Community Foundation for making all of this possible. I put together a PowerPoint. Melissa, am I able to share a screen?
Of course not.
I put together a PowerPoint to talk about this program. Thematically, the one thing that I'd like to really emphasize for the group is like Melissa indicated early on, it seemed like this was, it's from these loans are from the Small Business Administration, but all of the information that came out really talked about small businesses and businesses with less than 300 employees and so on and so forth. And they really didn't focus as much as they should have on businesses that are really just one person, which are a lot of businesses. And so, now as we're getting towards the end of the program, we're, both we and the SBA are trying to hang a brighter light on the opportunities that are available to sole proprietors. And so that's really what we're going to talk about today. It's a small group here, so feel free to jump in with questions either on chat or just, wave your arms at me. But here we go. So Paycheck Protection Act, let me just minimize this. Paycheck Protection Program. So Paycheck Protection Program, you hear people referring to it as PPP, was a program that was established by the Small Business Administration during the pandemic to provide forgivable loans to small businesses. And again, that includes sole proprietorships where there's just one person running the business. I'd like to emphasize here that it's forgivable loans. You get some money from the federal government, well, you get it via a bank or a credit union, which we would talk about, a bit. But if you play your cards right and use your funds the way they're supposed to be used, you never have to pay these loans back. So the forgivableness is, kind of the key to this program. And as you might guess by the name of the program, Paycheck Protection, the focus of PPP is on retaining and rehiring employees. As we talk about this, you are going to see that a lot of the focus of this program is on what we're going to call payroll costs, capital P, capital C, payroll costs. And those payroll costs are going to be important in calculating how big a loan you can get. And they're also going to be used in calculating how much forgiveness you can get. So kind of keep your eyes and ears open for payroll costs, because that's kind of an important concept in all of this. But, thematically think about making sure that if and when you get a loan under PPP, you're really focusing on using that loan on retention and rehiring of employees. And if you're the only employee, using it to pay yourself, okay? The application is streamlined. A year ago, we had a very, very complicated process to get a PPP loan. over time, that process has been streamlined significantly. So now we are down to about a 3-page application. Again, it's on our website, but we'll talk about it a little bit. But it's a very straightforward application. It shouldn't take anybody too long to fill it out. And, we would, it would be a shame if you didn't take advantage of this program, because of the paperwork. The paperwork is pretty straightforward. All right. So borrowers can secure either a first draw loan or a second draw loan. If you already got a PPP, you're entitled to come back for a second draw loan. The sense I have from the discussions we were having as we started the program today, I think most of us are going to be first draw users, borrowers who haven't gotten a PPP loan yet. So you are going to be first draw borrowers. And as I said, this is the key concept. This is the magic rule. Borrowers can secure 100% forgiveness by using 60% of your loan proceeds for the magic word payroll costs during an 8 to 24 week covered period that you get to pick. So that's the overall rule. Borrowers get 100% forgiveness by using 60% of loan proceeds for payroll costs during an 8 to 24 week covered period that you get to pick. We're going to talk about all of that in more detail, but that's basically the theme of the whole program.
Perfect. Jeff, I was just going to jump in.
Yeah.
We had 3 more people join.
Oh,
so
great.
I just welcome. Thanks for joining us. And I'm Melissa Scholz. And yes, we will send this PowerPoint to the participants. I just saw a question about that. And just Jeff is talking about the Paycheck Protection Program, the PPP, forgivable loan. So that's pretty much what you've missed so far for those that just joined us. The one thing I didn't say, but I'm going to say it now because, oh, you're about to say it, is it was extended to May 31st, but we're hearing from the bankers and from the SBA that they expect it to run out sooner. So time is of the essence. And on that, I will turn it back to Jeff.
Okay, Melissa, thank you. Yeah, and I don't think we can hit this hard enough. There have been times in the last year where PPP has run out of money, but then there has been additional funding provided. We don't think that's going to happen again. We think this is the last kick at the can. And like Melissa indicated, PPP they're accepted. The banks are accepting applications. Some banks are accepting applications through May 31st. So another 7 weeks, give or take. But on Monday, 2 days ago, the SBA made an announcement that funds are running out. So if the funds run out for this program before May 31st, there's not going to be any additional funding. So if this is a program that you want to take advantage of, you should jump on this right away and apply ASAP.
And Jeff, can you just reiterate, because we do have a good deal of sole proprietors.
Yep.
Obviously you talked about that forgivable piece and 60% needing to go towards payroll. Please, communicate that for proprietors.
Yep. And the rules, I'm going to jump back a slide. Again, this is the magic rule. And payroll costs, if you have a bunch of employees, it applies to payroll costs for your bunch of employees. But if it's just you, if you are just a sole proprietor, you are running your business by yourself, it's still 60% of loan proceeds used for payroll costs, which is just payroll costs for yourself. And that's what it's unfortunate that has not been hit hard enough, that there has been confusion out there in the marketplace that people who just run their own business, well, I don't have any employees. Well, yeah, you do. You're an employee. So this is going to be an important concept, and we're going to talk about it in more detail, and we're going to talk specifically about kind of the rules and regulations for sole proprietorships in more detail. So
Jeff, I just put the application for sole proprietors that use Schedule C
Yep.
in the chat, because it is a different form. They made it even more advantageous in the last month. So if you're a sole proprietor that reports your income on your own tax return, Schedule C of Form 1040, then you want to use the form that I just put in the chat.
Yep. That's a
And
good
we'll
idea.
send this out in an email too.
Okay, so again, you've seen the slide before, but May 31st is the deadline, but SBA said 2 days ago they're running out of money. Jump on this program. Okay. So how does this all work? Why is this, how does this program work? And PPP loans are guaranteed by the SBA, and the lenders are paid by SBA to make the loans. That's important to understand because we have had a lot of questions in the last year. When we start talking about this program, it's just like, my business is small, my credit rating isn't that good, I don't have any collateral, I don't have anyone with deep pockets who can guarantee my loan. And normally, if you were trying to secure a loan, all of those things would be a problem. If you didn't have a good credit rating, if you didn't have collateral, if you don't have someone to help guarantee the loan, if you generally show up at a bank with any or all of those problems, the bank is going to say, thank you very much, come back when your credit rating is better. In this particular instance, none of that stuff matters. It's important to understand the economics for the banks and the credit unions. The banks and the credit unions that you work with, any loan that they give you, if you are approved for a PPP, which you likely would be, if you're approved for a PPP, that loan is guaranteed 100% by the US government. So the lender isn't going to look to you to make sure that it's repaid. In addition to that, the government is paying the banks for each and every loan they make. So the banks have an economic incentive to say yes to you. So again, from the banker's point of view, one, I'm not going to lose this loan because it's not going to default because it's guaranteed 100% by the SBA. And two, hey, they're going to pay me to make this loan. So you're going to find very accommodating lenders in most cases. We should also tell you, and Melissa mentioned this, up until a couple of weeks ago, most banks, most credit unions, not all, but most, were participating in this program. Because the program's winding down, there's fewer and fewer lenders who are participating. So, and especially because we're running out of time, you should focus very, very quickly on finding a lender who will work with you. And that your number one call, your first call should be to the bank that you do business with. If you've got a checking account or a small loan or a savings account with a bank, go there first, right? If they can't help you, then go and, open up the phone book. No one looks at a phone book anymore. That shows how old I am, but open up the phone book and start calling smaller lenders. The smaller community banks, the smaller credit unions are usually more customer friendly than the big guys. The Chases, the Wells Fargos, the US banks of the world can sometimes be a little daunting to work with for smaller borrowers. So, you've got to go through a bank. It should be your bank if you've got a relationship. If not, focus on a smaller bank.
Let me jump in here because I know, Camille, you have some contacts, and in fact, I think US Bank is one of your contacts. So it really depends on having a local connection's the key.
Yep.
We've had great luck with Park Bank as well, and we're working with James Rubin at Park Bank. But Camille, I don't know if you have any other contacts you want to share and you could put in the chat. But at this point, using Associated Bank has also been very helpful. And I haven't checked with them this week to find out where they're at, but Associated Bank has been very good. Camille, do you have someone at Associated you would suggest?
We do. We have someone at Associated, and that's really the thing is really making sure that you have someone that's accountable to you. We found and knows who you are, and certainly being connected with the Madison Black Chamber. These are partners that we work with, that if you're not getting what you need, you can certainly give us a call, because we have a direct relationship with them, just as Melissa said. But we have worked with US Bank and have a direct contact, Associated Bank. And then we also, through if there's someone that does have some relationships or an account even with Chase, we have a national partnership with Chase through our National Black Chamber of Commerce as well. But
I will tell you though, Chase, at least previously, was rejecting applications
I heard
based on the new rules. They hadn't updated their system. So we're discouraging that option right now. But
okay.
why don't you, if you have contacts at Associated in US, Camille, you want to put them in the chat, and I'll let Jeff go ahead.
How about I send it to you, Melissa, and then you can send it out with the packet.
Okay.
It all remains in one spot for our.
Okay, I'll do that. Great.
Okay, so yeah, like Melissa indicated, Chase is a fine bank, but when the new rules came out for sole proprietorships about 4 or 6 weeks ago, it took some, and I don't even know if they ever did get it fixed, but their portal was rejecting everything that was coming in from a sole proprietor. So maybe you don't want to disparage JP Morgan Chase, but maybe focus on another lender, especially if you've got some options. All right, so and like Melissa indicated, she has put in the chat the application. You will see that it's really a pretty straightforward application. There's a couple of boxes to fill out, and some certifications that you need to make, but it really is that straightforward. But before you dig in, make sure you review the application and prepare your documentation in advance. And the most important piece of documentation that you're going to need, especially if you're a sole proprietorship, is you're going to need your completed and filed tax returns for either 2019 or 2020. And if you're a sole proprietor, you know that kind of a lot of the key financial information in terms of compensation and all is on Schedule C. So it would be a filed tax return, Form 1040 with Schedule C. And we're going to talk about that. Okay, so who's eligible? Who can get a PPP? Again, the eligibility requirements are pretty straightforward. You had to have been in business by February 15th, 2020. So you had to be in business 14 months ago. If you just started up business this year, you're not going to qualify. Okay, you have to have been up and running by February 15th. And then you either have to be a sole proprietor or a business with less than 300 employees. And again, we've got some new people who have joined. Welcome, everybody. At the beginning, it sounded like most of our participants tonight were sole proprietors. So it's either you work for yourself or you've got a business with less than 300 employees. All right. Oh, sorry. The business has to be owned by a U.S. citizen or a person who is in the United States lawfully using an ITIN number. Okay, for second draw loans, and I don't think we have a lot of those. I think we're mostly a first draw group, but if there's anyone who's interested in a second draw loan, you have to demonstrate a 25% reduction in your quarterly revenue comparing 2020 to 2019. So if anyone's second draw and wants some more detail on that, let me know. Otherwise, I'm moving on, because I think most of us are going to be first draw borrowers, people who are taking advantage of the program for the first time. And the nice thing about a first draw borrower is you don't have to show all of this revenue loss, right? All you have to do is you have to make the certification that current economic condition or current economic uncertainty makes a PPP loan necessary to support your ongoing operations. And I think pretty much everyone should be able to see that. We've all been impacted by COVID. And so, you know, when you fill out your form, you will see a checkbox that says exactly that. Current economic uncertainty makes loans necessary to support ongoing operations. Just check that box and move on. All right, so that's it. That's your eligibility requirements. If you're a sole proprietor and you're a US citizen, and this is your first draw and you've been impacted by COVID, you're eligible. All right, so now that you're eligible, how do you get a loan size? How do you get your loan size? Okay, what your loan size is, if you have more than one employee, your loan size is your average monthly payroll costs times 2.5. Okay, so how do you calculate that? You take your payroll costs in 2019 or your payroll costs in 2020. You divide that by 12 because we want an average monthly payroll cost. So you divide it by 12 and then you multiply it by 2.5. That's the extent of the math. Okay, if you happen to be a bar or a restaurant, that 2.5 becomes a 3.5. There's a recognition at the Small Business Administration that bars and restaurants have been hit particularly hard by COVID, and so they have an opportunity to get a little bit more money than the rest of us. So if you're just a non-bar restaurant business, it's 2.5 times average monthly payroll costs. But if you're a bar and a restaurant, you get an opportunity to get 3.5. Okay. If you're a seasonal employee, there are very specific rules. You know, if you're a business that's open less than 6 months a year, there's very specific rules. If anyone has any questions about that, put them in the chat. But that's an area where things start to get a little bit detailed, and more detail than we really have for something like this. Okay, payroll costs. We've been talking about payroll costs. It's just like this guy's been talking about payroll costs for 20 minutes. What the hell is, can I say hell? What the hell are payroll costs? Payroll costs are, what do you get to include in that calculation that you multiply 2.5 by? Payroll costs are compensation of less than $100,000 to employees residing in the United States. Again, if it's just you, that's how much you pay yourself. Okay. That any cash tips or equivalent, if there's a benefit package, you know, payments for vacation, parental, family, or medical leave is included. Allowances for separation or dismissal. If you're a small business and you had to fire someone last year, oftentimes when you fire someone, you give them a separation payment. You know, that would be included. If you provide group benefits for healthcare or retirement, those payments for those benefit programs are included. Payment of state and local tax assessed on compensation. Here in Madison, we really don't have that. And then any insurance premium you pay for your employee for life insurance, disability, vision, or dental insurance. So all of that gets thrown into the mix for your payroll costs calculation. All right. I went through that fast because this is what we really want to focus on. The loan size for sole proprietors. Okay. Specifically, loan size for sole proprietors that don't have employees. Okay. It's just you. You're your own business. You're your only employee. Okay. This is where, like I said before, you have to have filed your 1040 income taxes with the IRS to be able to take advantage of this. But you have a lot less math than you do with some of the other types of businesses. What you do is you take the gross income from line 7 of Schedule C of Form 1040 for 2019 or 2020. Use the one that gives you a higher number. Do the math for both of them, right? If you filed both a 2019 tax return and a 2020, run the math on both of them and use the one that gives you a higher number. You take the gross income from line 7 of Schedule C of Form 1040, again, from either your 2019 or 2020 taxes. Again, we want average monthly payroll costs. So you take the gross income from line 7 and you divide that by 12. Divided by 12, that gives you your average monthly income. If for some reason that number is higher than $8,333, then use $8,333. Okay. Then you take that number and you multiply it by 2.5. If you're a restaurant business, the same rule applies. There's a recognition that restaurants and bars have been hit harder. So if you're sole proprietor, and the one woman who was making soul food at the beginning that looked very good, by the way, you're in the restaurant business, you would have an opportunity to multiply your gross income by 3.5. Okay.
So Jeff, can I ask a quick question here?
Sure.
Is
Yep.
it safe? First, this might be a good place to kind of pause and ask for other questions just to make sure
Yep.
that our participants are current and clear up to this point. But if once you find your gross income and divide that by 12, is the $8,333.33 the maximum?
That is the
If it's
maximum.
more than that, then only use the 8,300 or
Correct. And to make sense of that, if you let's just go back. Remember when we started talking about payroll costs, you can only award compensation of $100,000 if an employee, including a sole proprietor, makes more than $100,000, then the cap is $100,000. And if you take $100,000, divide it by 12, that's what you get. So that's how we get to that 8,333 number. It kind of extrapolates out of that $100,000 compensation cap. Did that make sense, or did I just confuse things?
so if you make more than $100,000, you can only qualify for up to $100,000 with the PPP program.
Correct. Going back to payroll costs are compensation of less than $100,000. So let's just say, for the sake of discussion, you're not a sole proprietorship. You've got 10 employees, but 2 of those employees, someone makes $150,000 and someone makes $125,000, and the other 8 employees are under $100,000. If you had those, you would have to cap the 150 person and the 125 person at $100,000. Okay, so you have to apply that same rule for the sole proprietorship. So, if you make more than $100,000, for the purposes of calculating your loan size, that's capped at 100,000. You divide that by 12, and that's how we get to the 8,333.
Jeff, I'm going to jump in here too, just to emphasize, this became particularly relevant because they started allowing you to use your gross revenue when we were looking at just kind of what your net revenue was, like your actual profit, then the 100,000 wasn't as common, I will say, for the small
Yeah.
businesses we were working with. But when you're talking about gross revenue, there's a bigger chance that may be an issue. And so that's where you have this limit.
Yeah, it's, we can talk about the policy of how we got to, the fact of the matter is you're capped at 833.
Mhm. As your average monthly
For your average
amount.
monthly, right?
And
so
then
that,
do the math with the 2.5 or 3.5.
Yep, I'm actually doing that math. So the maximum amount of a loan would be $20,833 and change. Okay. All right. If there's no other questions, I'm going to move on. Okay, moving on. And again, going back to what I'd said about 10 minutes ago, the banks are going to say yes, right? Almost everybody qualifies. And if you're able to demonstrate, that you've got this gross income on line 7 of Schedule C, you're going to be able to get one of these loans. Okay. So when you get the loans, what can you do with it? My favorite part of the last year is the sometimes hysterical questions from clients about what they can use it for. No, you cannot use it to buy a car. The Paycheck Protection Program, the number one goal is for businesses to keep their employees employed and put money into employees' pocket. So there's a very limited number of uses. Let's just say you get the maximum to $20,833. How can you use that? First of all, you need to always be focused on this 60-40 split. Okay, you're allowed to use it for permitted uses, but if you want full forgiveness, if you want it to set this loan up so you never have to pay it back, focus on making sure that 60% of your loan proceeds are used for payroll costs. It can be more than 60%. It can be the whole thing. You can use the whole thing to pay yourself. That would be fine. In fact, that would be the safest way to do it. But at the very least, at least 60% has to be used on payroll costs, and the 40%, no more than 40%, can be used on other things. Okay, so what can you use it for? So you can use it for payroll costs. We've kind of beat that to death, but it's worth mentioning again, 60%. If you own your own business, or if you own your own business site, you can use it for mortgage interest. You cannot use it for mortgage interest of your own home. You can use it for rent. You can use it for utility payments. You can use it for computer software and cloud computing, and for your human resources and accounting needs. So if you hire an outside accountant, you can use it to pay your accountants. If for some reason you had property damage last summer during the Black Lives Matter protests, if you had any damage to your property that was not covered by insurance, you're allowed to reimburse yourself for that property damage. And then you have supplier costs. If you have supplier costs under a written agreement that was executed in 2020, then you're allowed to use proceeds for supplier costs as well. But if you own a restaurant or a bar and your supplies are mostly perishable goods, food that comes into your restaurant, then you don't need the written agreement, because perishable goods are, by definition, bought short term. Okay. Again, you've seen it a bunch of times now. 60% has to be spent on payroll costs for loan forgiveness. You know, you've gotten your loan, you've used your loan for eligible costs, and now you want to get forgiveness. Okay. So after you receive your loan, borrower is entitled to select its own covered period, and that covered period is between 8 and 24 weeks. Most of you, it would be our very strong recommendation, you pick 24 weeks, because that gives you the longest possible time to use your funds. Again, SBA wants you to take this loan. We were talking about $20,000. You take your $20,000 loan. It doesn't want you to throw it in a bank account and use it for a rainy day. It is a rainy day. You have to use the proceeds very, very quickly. So let's just say, what's today, April 7th? You get them April 7th. You then get to pick anywhere from 2 to 6 months from now that you say, yeah, I'll use my loan proceeds in either 8 to 24 weeks. If you're taking advantage of some other type of SBA program, then maybe it makes some sense to use a shorter time. And we're certainly happy to talk to individual businesses who are taking advantage of a couple of different programs on why it might be smarter to use a short covered period. But for almost everybody, for 90% of borrowers, the 24 weeks is the period that you're going to want to check, because that's going to be the longest possible period, and it's going to give you the most time to use up all your loan proceeds in your 60-40 split. I will also add that it doesn't happen a lot, but because Melissa and I have been working with borrowers for more than a year now on this particular program, what we do hear from time to time is, hey, Jeff, I get it. I know I'm supposed to use 60% on payroll costs within 24 weeks. But quite frankly, for my particular business, payroll isn't my problem. I've got to pay my rent, or my landlord's going to shut my lights off. Or, boy, Jeff, my suppliers are going to stop supplying me if I don't get them paid for all the back money that I owe them. So I've got to use it for my supplier costs. That's fine. There's no, if you don't do the 60-40 split within 24 weeks, that's fine. There's nothing illegal about it. There's nothing wrong with it. But it will impact how much of your loan is forgiven. If you don't follow the rule that we talked about at the beginning and are now talking about at the end, if you don't follow the rule that 60% of your loan proceeds are used for eligible or for payroll costs during 24 weeks after you get the loan, that's okay, but you're not going to get 100% forgiveness. You will have to pay some or maybe all of that money back. If you have to pay it back, the interest rate is pretty good. It's 1% over 5 years. So it's pretty cheap money anyways. But just, you know, all of these loans are not forgiven. The forgiven loans are 60% on payroll costs, all funds used for eligible costs within 24 weeks. If you break those rules, again, nobody's going to jail. It's not a violation of any kind of law. You just have to pay the money back. All right. So that's, you know, basically the presentation. I know it's a lot for an hour. I'm certainly happy to field questions that people may have.
I see there's a question. How do you show that you paid yourself? That's a really good question.
It's a really good question.
Yeah. Jeff, you want to answer it?
So the you know, the money that you take in on Schedule C, you know, you just need to be able to demonstrate that, you know, or make a certification that you use the money to pay yourself. So there's a two-step process. You apply for the loan up front, and then 24 weeks from now, you apply for loan forgiveness. And in that, in that forgiveness application, especially for small loans, all you do is you make a certification that says, yep, I used it to pay myself. And if you are a sole proprietorship, that will make a certain amount of sense.
I'm actually looking at the forgiveness application that was revised on March 4th to see if there's any further guidance. So, when you're calculating, we definitely have guidance when you're calculating your amount on the gross income, but
Yeah.
um,
Number one, work with your banker on that.
Yeah.
But Melissa, I think you're going to find that all it is for small borrowers. I think all it is a certification that,
Yeah,
yep,
yeah.
I used it for, there's a certification on the forgiveness application where you check a box that say, yes, I'm honestly telling you that we used it to pay yourself. And as a practical matter, if you're a sole proprietorship, what else are you going to do with it? Of course, you're going to use it to pay yourself.
Well, no, they're going to buy supplies depending on the type of business.
Yeah.
Anyway, okay.
It's a good question, though. It's a really good question. Sometimes a lot of this stuff starts to feel theoretical.
Yeah, you'll see. I'm going to put this in the chat if you want to look at the forgiveness application. You'll see.
Am I still sharing screens here?
Yeah. Oops, I didn't mean to send that to I'm going to send that to everyone.
Just, you had been looking at are you guys now looking at an application?
Yes.
So I just thought it would be, I know Melissa put this in the chat and this will certainly be in the materials that we sent out, but a year ago, this application was 19 pages long. It was really daunting. But I thought since we had 5 minutes left, I would show you how I just pulled this up while we were talking here. Check, you're a sole proprietorship. Say where you were established. The name of your business address, your tax ID number, your telephone number, and email address, the primary contact, that's going to be you. Total gross income from Schedule C of line 7 of Schedule C. We talked about that. You from either your 2019 or your 2020 tax return. If you don't have any employees other than the owner, you use this box here. You take that number from line 7, you multiply it by, or you divide it by 12. There's our 8,333 number. Then you multiply it by 2.5. That gives you a number there. What are you going to use your loan for? You're going to use it for payroll expenses. We might use it for rent, utilities. This is not a be all and end all. Use your best guess there. Number of owners with more than 20%. It's going to be put your own name there. You are the sole proprietor or owner. You own 100%. And then this is information that you can choose to this is demographic information, which is optional. You can fill out this box if you want, or you cannot fill it out. And then you just have a couple of questions. Have you ever filed for bankruptcy? Have you ever been excluded from a federal program? Have you been defaulted on any SBA loans or any other loans to the government in the last 7 years? Are you under any common management with any other businesses defaulted? So you have these 9 questions, which you should be able to ask. And then you check some boxes here and you sign. So in terms of paperwork, it's pretty straightforward. And again, we filled one of these out that's on our website. So you can
not totally true, Jeff. I looked. The one we filled out is the old form that uses line 31. So we should We should probably fill one of these out and get it up on our
I,
website.
I will fill one of these out tomorrow and we'll get it up on our website.
I just posted or I'm getting a blank one posted, but if we can get a filled out one, that's even better.
Yep.
I wanted to add two things.
Yep.
On the year of establishment, they want to see like a bank statement or an invoice or something that shows you were in business as of February 15th, 2020, just so you know, that's how you prove that. And then one other thing, when Jeff was presenting, he said you had to be a US citizen. The slide gave a little more nuance, but I just wanted to point out that it includes green cards, people that are here and legally reside in the US. So you can see that it includes people with an ITIN who just are businesses that use ITINs, but that still does has a requirement that goes with it that says you reside lawfully in the US. But there's a whole bunch of categories of people who aren't citizens, but who are lawfully here and lawfully working. So
Yep.
Wanted to clarify that.
I would also say we've had some questions on NAICS code. That's a federal government code that businesses have to fill out on all kinds of different applications. If you just Google that, a whole list of codes will come up, and just use the one that best fits your particular business.
And if you're trying to get the 3.5 times your payroll because you're a restaurant or a business, I mean a restaurant or a food service, you need an NAICS code that starts with 72. So be careful that you use the right one. I've found that it's often on your tax return.
Oh,
you know, so the code that you're using. Jeff, I don't know, do you know this offhand? Someone's asking if there was a personal bankruptcy in the last 5 years, if that affects eligibility. I haven't seen, I don't know where that would be picked up.
Let me.
It says, are you presently involved in a bankruptcy?
Here we go. Presently involved. Yeah, that would debarment ineligible from participation in the, or presently involved in bankruptcy. Yes. So no, if you are not currently, if your bankruptcy has been resolved, and this is, and maybe you saw in the news, there was a big news story, I guess maybe a month ago, that where the Biden administration had changed one of the rules that said that if you were delinquent on your student loans, that would not prohibit you from I guess delinquent or default on your student loans. So some of these things have been softened up in the last month. Again, this application has gone from 19 pages to 2.5 pages. So, you know, some of those personal financial issues are not as big a concern. Again, the overall theme here is the government wants you to take this money. They want you to put it back into the economy. So everyone involved in the process wants to say yes to you. So that's the attitude that you should approach this with. But again, jump on this, this afternoon, tomorrow. The funds are running out.
Yeah.
And again, Melissa and I are closer to this than most people are. In the past, there's always been these rumblings from Washington that, yeah, it's going to get extended. Oh yeah, we're going to give more money. We're not getting those rumblings anymore. It seems like this is it. The program's been around for 14 months now, and I don't think there's going to be any additional funding. So this might be it. So this is your last opportunity. So take advantage.
Can I ask also a quick question as well?
Mhm.
For rent, is rent forgivable?
Rent for your business space is forgivable.
If it's in that 40%.
Yes. Yes, if it's in the 40, if it's in the 40%, it's forgivable. So if you've got if you've got a catering kitchen, or you rent, we've had some people who, the restaurant closes down during the day and they come in at night and they rent space in a commercial kitchen at night to make their food. That rent would be forgivable. The rent for your apartment is not.
Yeah, unfortunately, home-based rent. Well, I guess to the extent that your accountant has allowed it and it's reflected on your tax return, Jeff. I mean, I will say that in general, deducting home expenses, home office expenses is complicated, but there is a formula and there is a way to do that. And Camille, maybe you know more about this. So I don't want to say blanket, it's not allowed, because I think if it's a allowed business expense on your taxes, then it may be allowed. But for sure, that's on the forgiveness part of it. And that you definitely want to check out also with the lender. Jeff, I know we're over time. We're happy to stay on a little bit longer if people want to. And there's a question, if you could explain the EIDL, Jeff.
Yes. So EIDL is a different loan program that was available to borrowers during the pandemic. If you don't have an EIDL, don't worry about it. It was early on, there were a number of borrowers who were taking advantage of two different programs, at PPP and EIDL, and the intersection of those programs was often complicated. If you don't have an EIDL, if you had an EIDL, you would know it. So if you don't have an EIDL, don't worry about it.
So wait, Jeff, I wasn't totally listening. What about people that are in the right census tract? Are they getting emails from SBA about getting EIDLs?
If they did get an, if you did get an EIDL, there has been additional funding provided for EIDL for certain businesses that are in certain challenged census tracts, certain low income census tracts. But if you do have an EIDL and you're in a census tract, the SBA will reach out to you. There's no application process to get a second EIDL loan.
And there's no ability to get a first EIDL loan right now.
Not at this point, no.
Okay. Okay. I just put a chat, something in the chat. Really important question someone asked, whether this counts as income. It does not. It does not count as taxable income. And the expenses that you use it for are deductible expenses. So, to the extent you've paid rent, things, you still would deduct those on your, so it's like you get now, why are you grinning?
I'm grinning because you're a tax lawyer and I'm a transactional lawyer, and you get so excited about these
I do.
the little tax advantages. It makes me laugh.
Yeah, it's true. It's quite, I mean, because this changed as of December 27th. This would have been taxable for 2020, and then they changed the law. So, and then they changed it again and made the expenses deductible. So anyway,
that's a double benefit. That's really what we like here at the chamber, is leveraging, those unseen expenditures wherever you can. And a lot of our businesses like to do that, and that should make some folks very excited that it does not count as income. And
so for this group, we really want you to apply and we really want you to succeed. And so, you know, we're not putting this out on the internet far and wide, but we're going to put my contact and Jeff's contact in the chat. We don't charge you. Please contact us if you have questions, or if you contact a bank and you know you're having a problem, because we really want to get you over the finish line.
Yeah.
And so, and the other possibility, if we start getting a lot of same questions, you know, we may just do another Zoom where we do like a work session and like fill out the application together. That's another way to be really efficient about it. So, yeah. So, okay, I'm going to put my email in here, and Jeff's as well. This is different.
And I think I have your emails listed on the reference sheet as well, under PPP references. I
Okay.
don't know about
Yeah.
Jeff's, but it'll be.
And seriously, you know, and again, a lot of small businesses are not big consumers of legal services. Pick up the phone and call us, send us an email. We are here to try to help you through this
Yeah.
process. So don't be afraid to take advantage.
Jeff, you can share your cell phone if you want. In my experience, calling my cell phone is a very difficult way to get me because I'm usually on it, but
Yeah.
I'm happy to set up a call. So email me. It's actually really Jeff that you want to talk to anyway. That's the joke of it all. But you can email me or him, and then we can set up a time to talk.
Yeah, that's usually the best way to do it. Melissa and I both get kind of scheduled with calls during the day. So the most efficient way to make sure that we get back to you in a timely manner is to send us an email, and then we'll and we will circle back with you.
All right. And I do want to, sounds like at least one, Brian, had already gotten a first PPP. And so definitely all of this same urgency of hustling applies if you're in position to go back and get a second. And in that case, I hear that Summit is still accepting applications if you got your first PPP from them, and it's been 8 weeks, just so you know. Okay, all right, are we good?
Just one more thing, just to reiterate, there's a rule of thumb that there has to be 8 weeks between first draw and second draw. So just kind of keep that in mind.
All right.
All right.
Thanks all for joining, and we hope that it's successful. And we hope to hear from you if it's not.
Yeah.
So take care.
Thank you.
So much, everyone, for
everybody.
joining. And thank you so much, Melissa and Jeff. You guys are invaluable partners, and we really do appreciate your time. We really do want our Black businesses to not miss the boat. And so, you know, let us know if there's additional questions. We're here to kind of, again, as Melissa said, take you through to the finish line. So with that, we wish you a very good evening, and stay healthy and well.
You
All
so
right.
Everybody.
Thank you. Bye-bye.
Bye-bye.